What is up, trader friends? It was a big day after all, and this is the follow-up of the video I made public yesterday, or sorry, the video I made yesterday but made public today. I cannot think properly. And so I took a whole bunch of notes of what I want to cover today, and a couple things I want to start off with. And so first is it's just like a comment on the general FinTwit community, which is like, I think most people don't see, if you're not producing content, the amount of just like total trolls and assholes out there. And I think especially when you're tired, it's so easy to get so frustrated by that. But then, thank you, David Hanlon, for your comments on that YouTube video. But it's so easy to just be like, to get lost in that rather than looking at the bigger picture, where it's like, last night my tweets are not, traditional Lance tweets. I don't tend to do, bold calls and share my live trading like I did. But the reality is so many, like virtually 100% of the comments I received were all about like, congrats, like, oh my God, like this is awesome. We're rooting for you. Like, okay, like this is awesome. Like, thank you for sharing. Like, it's so important whenever you do something online to recognize that like 99 out of 100 people consuming the content do really appreciate it and are good people. And the reality is like, there's always going to be that 1%. Like most people probably don't see it, but there's not a single post I do where I don't need to block someone for either just like some totally just asshole comment or like trolling or anti-Semitic bullshit. And it gets annoying, but it also, you lose the big picture. So I'd like to say just like, thank you for everyone being so supportive today. And thank you for supporting each other in this community that I otherwise had not been a part of the last couple years. And I've made a lot of really great friends doing this in real life and otherwise, whether, knowing people in Vegas from Traders for a Cause, like the David Hanlons, the Kyle McWilliams, the Tanners, and everyone else. But look, yeah, that's my little mushy thing. So let me get started. If you've not seen the video I posted a couple hours ago, which was the recording from last night, I highly recommend you watch it before this, just because it will give you some context about what I was thinking. And it's so funny because yesterday when I recorded the video, I was extremely tired after doing a long endurance race over the weekend and also learning how to surf and all sorts of no sleep stuff. So I was like, oh yeah, I'm just gonna like get a good night's rest. I don't even know if I'll wake up for this. And the point of these game plans really is like, it's just your best information at the time. And all this stuff is so dynamic. And that's kind of what we're going to talk about today. Like, I took the time to really make that game plan video and to think out my thoughts, but it's so critical what I said, which was like, I want to wait to see how things open with the futures. I want to see how they open on overnight trading. And the second overnight trading happened, that really started to change how I viewed some of this. And then actually so much of my game plan and the stuff I traded today was stuff that I didn't say. I said the exact opposite for probably like half the things. Like half the things I mentioned were dead right, and half the things I mentioned I did the opposite. So that doesn't mean that my game plan was dumb or that I'm wrong or that it was useless. That's just how game plans work. And it's so important we just adapt, right? And that's also why I don't tend to share a lot of live stuff and or even just time sensitive stuff, because like it doesn't give me the ability to adapt when my mind is adapting. And so let's dive into this. I kind of want to so big picture, as a breakdown of P&L splits, like my biggest trade was in the Nikkei, and that was via futures, which is /NKD, Nancy Kilo Delta. So that was 40% of P&L, 20% of P&L was NQ, which is of course is the NASDAQ. 10% is SOXL, even though I said I wouldn't probably be interested in SMH. I was wrong, and we can get into why. BAC was my sleeper pick. I did in fact trade that, and I really loved that, and I'll get into why. And then like so much stuff you'll never ever expect. Like, who would have thought that ETH, I'll even do the futures, ETH would totally bomb out like it did. And I was trading that actually via MET, Michael Echo Tango, which is the micro contract. And also IWM, which I was trading via Romeo Tango Yankee, the E-mini Russell. And Oh wait, I didn't say that. So Bank of America, VIX, Ethereum, Russell were 5% each. Soxel 10%, Nasdaq futures 20. The Nikkei was 40%. My biggest position in notional value by far was actually the yen, which is 6 Juliet contract. Oh man, look at that melt. I really, really, really struggled in this contract. At one point, I was taking a pretty decent loss on this just because and I'll get over my tweets. So pretty much, yeah, that's a thing. Like I was live tweeting some of these things and people are like, oh man, what are you looking at? Like what stocks are you interested in? And it's like, I'm not tweeting these things out just for my health. I was tweeting, hey, like, oh my God, I think it was actually Ethereum. So yeah, let me go step by step through the night. So the first thing that happened, and this was at around 9 p.m., was Ethereum totally puked out. And so never did I even think I would be trading Ethereum, but sure enough, I always have Bitcoin and Ethereum on my watch list, and Ethereum totally craps out. And so for context, here's the daily chart. And we had been chilling up at like 3,300 and we just got absolutely nuked. I mean, we lost like a third of value, right? 1,100 points. And so compare how far we were on this range and now compare it to BTC. So BTC especially at the time, BTC was still up at 5,500. So ETH gets nuked all the way down there essentially, which it is a higher beta name, but nevertheless, that's just an absurd move. And so here's the thing that made ETH so interesting, not just the daily, but so keep in mind right here, we covered almost 30% in about half an hour. Maybe it was like an hour and a half, but like we cover 30%. And meanwhile, BTC was not really doing that much. It did have a puke, but nothing like the Ethereum one. And then the most interesting thing was the Nasdaq was only down 2.5% at the time. And if you were to tell me, hey Lance, like the Nasdaq is down 2.5%, where would you price Bitcoin? Where would you price Ethereum? Like, I think as you trade, you start to develop an intuitive sense of just how price action moves and like just some of the correlations. If you told me NASDAQ down 2.5%, I would guess that maybe Bitcoin would be down, I don't know, 6 to 8%, maybe 8%, 6 to 10%. And I would have said Ethereum then should have been maybe down, 8 to 12% or something. So when Ethereum just totally blows out to minus 25%, while Bitcoin is staying up at that range and NASDAQ is up at that range, Ethereum was the definite odd man out there. So I bought the shit out of this down move at around 2,300. Especially like huge volume puke. I mean, this was big, then it got really big. And then I'm just waiting for the prior bar highs. So I ended up, getting in, like 2,300, like I said. Again, my prices aren't exact. Like I'm doing this through many times, and it actually took me a little bit. I hadn't traded Ethereum minis before, so I was actually a little slow connecting the dots as this was panicking, but whatever. And I was just like, holy shit, if this Ethereum keeps on going, I am so comfortable just averaging and buying the shit out of this. So many people are like, oh my God, what's your stop? And people probably die inside and are like, oh my God, you're not a real trader. You're going to blow up. When I say that, like, there's many times when I don't have a stop. It is totally okay to not have a stop. Oh God, people are going to end up blowing up and suing me for this. It's totally okay to not have a stop as long as you size appropriately given the risk. And, if you're playing meter version, generally, I don't want to be hitting out at 2,200 for exactly this reason, which is it just kind of fakes itself out. And generally I want these to go lower. Like if I'm buying at 2,300, like if this goes to 1,500, oh my God, I am going to make such an absurd amount of money just buying like 10x more. So I'm sizing it so that, at 2,300, I might have X amount here, but I'm leaving room in the tank. So here I can get, 2x, 5x, and down to like 10x down here or something. The other thing too that I found interesting, a lot of people on Twitter were making comments about their price targets, whether it was for like Ethereum or Apple. And it's like, look, like in day trading world or swing trading or whatever this world is, like I'm just trying to catch the next the next leg. I don't care if Ethereum goes to 800 in a year. I don't care if Apple goes to 100 in a year. And so many people were like waiting for prices that were just totally in imagination land. Like in no realm would those prices have ever remotely happened on Monday, even given the panic. So anywho, back to the point. I bought some Ethereum without a stop because I would have loved for it to puke out and go further. Already people are up in arms, I'm sure. But so then what's so interesting is so I think what happened, okay, so I wanted to go to bed, but then I was jacked this Ethereum, but I'm like, okay, I'll just, see how it trades, and then just kind of, get ready for bed at around 10. But then what happens right before bed, I see that the yen is starting to spike. The yen makes a decent move here. And again, if you haven't seen the Stephen Place video that I retweeted, I highly recommend for the macro context. This move isn't quite big enough for me, but it is a very big move on the daily. Then we curl to highs and we start to really go and we do this spike up. And so again, if you're really quick on the keys, which I'm really not anymore, half the time I'm just on my phone because I'm, I'm trading at absurd hours of the night. But this really isn't so quick. And I was able to short a good chunk on the spike. And then you're just like immediately in the money. And this is just such a high volume capitulation, like stop out. So that was wonderful. I thought this would be game over. And so I was even adding like pretty lower on this bar thinking, oh my God, game over. And so then concurrently, this was about 12:30 p.m. Eastern. And so then what happens is 12:30, the Nikkei rolls over. Nikkei Nancy Kilo Delta is the contract. So this had been halted earlier, then we roll over. And so what happens is we roll over at around that time. And that's fine because, of course, keep in mind the yen has an impact on how this gets priced in dollars and everything. And then the Nikkei was down 6% here, I think. And then we just utterly melt. Keep in mind, this is an index. This is their S&P. This is the Japanese S&P 500 essentially. And this just gets absolutely taken to the woodshed. Holy shit. When do you see an index go from -6 to -12%? So even though I'm short the yen, as this just utterly melts while the yen is kind of just not doing anything, I'm just thinking, holy shit, this is the biggest dislocation ever. In my head, I was just trying to think, I've seen, what was it, August 27th, 2015, whatever that big panic day was. I've seen the COVID days. When you've seen these really outlier days, you get a feel for the days that make you just say what the fuck? And as this move was happening, I was saying, what the fuck? Because it was so ridiculous. And so now look for context, let's pull out the daily. This is a really, 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 really big move in 3 days. Keep in mind, this is, let me go back to the daily does it the most justice, right? 3,800 down to almost 30,000. So that is over a 20% move in 3 days when we're already 10% off of highs. That is an obliteration. I can't imagine the Nikkei did anything like this in COVID. Oh my God. That's why this context is so important. This is a weekly chart. So during COVID, which of course was probably one of the biggest crises we'll ever see, this went from 2,400 to 24,000 to 16,000, an 8,000 point move. Now I understand it's a higher price now, but nevertheless, we went from 42,000 to almost 30,000 in a way faster amount of time. So that really goes to just show you how crazy this move is on the daily chart. And keep in mind, I really love just 3 big down days, and we had this. So my confidence, especially based on the volume and the level of panic, and where you're worrying about circuit breakers and everything else, my confidence that this would probably have some epic bounce at some point was really, 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 really high. So let's go back here. We finally start to flush out. Here it's a big move. I'm potentially buying just little small amounts here and hitting out. But then this finally goes below like the lower Bollinger. This is the real flush out. This is the holy shit move. And so once this turned, I just bought the shit out of this bar. Huge, 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 huge size. Then what happens is we end up rolling over. So this is where I got in my first oh shit moment. Like, oh my God, I can't believe this is happening. And we barely roll over to lows. So even when this starts to struggle here, I'm starting to take off. I take off a good chunk. I was still holding on to some, again, just because like this is down so much. There's some size that I'm just comfortable holding. Again, this is not recommended for beginners. This video is not investment advice. Don't try to trade like me. You know, you don't know my outs. You don't know the details of why I'm doing these things as well as I do. They're not your strategies. Trade it your way. But for me, there is some amount of stock that like I want to have no matter what when this is down so far. And so I am getting out of the oversized portions and getting down to a core. This barely goes to lows. Then we do hard reversal again. And so I was a little bit skeptical licking my wounds. Then this bounces, we pull back. This pullback I felt was probably going to be the lower high. The volume was also overall starting to die off a bit. So I started to reaccumulate in here. We have this really nice bounce and I'm like, okay, you know, essentially we have the higher high. This was pretty much almost the double bottom. This though is a lower high, but then we get the higher low. Then the second we break above here, we get a higher high that goes all the way up here. And then we get the higher low here. So as long as this kind of was gonna hold, in my mind, I'm thinking game on. So this is where I really, really started to accumulate. So now let me think. At some point, so now let's jump back to the yen for a second. Okay. There's a lot going on. So the yen I thought was, oh my God, I'm 100% going to make money on this. Sure enough, we end up curling up. And so the yen gave me so much trouble. I end up covering here for a pretty sizable loss just because, so keep in mind, like trading Forex futures is super fun because the notional value of the contracts, like you can get is just absolutely absurd. You know, like a 1% move is massive for Forex. So you can get like, you know, 100 million is quite a fair amount. But you can get massive notional values on this. And so I have really good prices. I'm very lightly covering. I think it's probably done, especially given the volume. And sure enough, it survives. And I was just dumbfounded. So I take this loss, we fail. I kind of reshort and like, the same deal where like as this is weakening, I think at this point already the Nikkei had already done its craziness. So I'm like, okay, now we're done. And I start to rework into this and it starts to look good. I do cover a chunk here. What was incredible is like this market was trading so illiquid, which I guess doesn't surprise me, but anytime I would put a bid in for any meaningful size, because I don't think I can do hidden orders for these futures, my order would just be chiseled and front ran just so incredibly quickly. So that was frustrating. There was a lot of times I tried to get out of way more size on this turn. And like, you know, I would want to cover like 30, 40, 50, 60% on these turns. And I would get like 5%. And then we'd go all the way back up. And so I was hanging on to this trade by a total thread because this was going to be my highs again. So as we pulled back, you know, because again, we cracked really hard and like everything was kind of bottoming at this point. So as we pulled back, I assumed this would be the lower high and I was re-shorting size and even adding more size into this. But this just stayed so stubborn. So I ended up just like breaking even on like a huge chunk of the yen. I mean, first I took a loss. So then I was breaking even on a lot and whatever I held, like I covered a good chunk down in here later in the day and I'm still short some, but like the yen, I actually didn't make any super meaningful money in. So that's all I'm going to talk about the yen for now. But now, actually, that's not true. So real quick on the daily chart, we are approaching prior bar lows. Like this probably could pull back more. The other thing to keep in mind is like this really got ignited on a Bank of Japan policy. That Bank of Japan policy change was days ago. And I like so much of this move, again, if in all these things, if you listen to the Stephen Place video, so much of this stuff was positioning. And I'm also going to get to that in the VIX as well. So now let's jump back to NKD. Okay. So NKD finally curls up and I Like on this bounce, I'm starting to sell maybe like, I don't know, 20%, 30%, but I'm feeling really good. And I want to hold big picture because I think, oh my God. Oh, so here's one more thing I would add. While I'm doing this, so I have Bloomberg, and so I'm just keeping up with the news and the articles. Like I knew this was a really big move, but then Bloomberg published some article on the volatility of the Nikkei. And ever since the data, I think in like, I don't know, 2011, this was the largest volatility blowout like ever by so far. Like I meant to pull up the chart for you guys, but I didn't. But it is obscene what a standard deviation move this was for the volatility. And then I believe this was the largest move since 1987, just because the vol data I don't think goes as far back. So once I saw some of that data, I was like, holy shit, like this move is just so incredibly big. Like I really need to try to hold a good chunk of this. So let's see, this is around 4 a.m. Oh my God, I have like PTSD from not sleeping. Okay, yeah, oh yeah. So at 2 a.m., the NASDAQ just totally flushes out. And like massive volume, I think the NASDAQ was down like 6% here. And so once this turned, again, huge volume, I waited for the turn. I bought the shit out of the NASDAQ at like 17,500. You know, and again, in my prior video, I said I didn't have interest at the NASDAQ, in the NASDAQ. Well, you know, that all changes when the NASDAQ goes down 6%. Because again, I have this mental database, like, man, I don't know if there's maybe one day in my career, maybe 2 days, have I seen a 6% down NASDAQ move. And for that to just get absolutely nuked so quickly like that. So I started to buy the shit out of the NASDAQ. ES didn't do anything. What time are we at here? Oh no. Oh my God, I thought my stuff froze. If this froze mid-recording, I would be so upset. Holy shit. So the ES did nothing. Actually, no, we're still back here. Wow, yeah, the ES did nothing like that. Man, look how more severe that was than the spiders. And even so, like, the Russell did nothing like that either. So like, wow, like that NQ really was just such an anomaly. Like that's just such a mega melt. And so the other thing, obviously, I spoke about this. So I do the overnight trading. Some of the overnight trading, like stuff was just printing at just stupid levels. And that's where like you kind of just need experience to know what prints are going to be good. I really, really, really felt like anything sub 200 in Apple was just going to be a no-brainer buy. And so as I talk about in my video from last night, my sleeper pick was BAC. In BAC, I was like getting fills at like $33. Now, all these ended up getting broken for reasons I won't go into. I have my own theories that it's just going to be a waste of everyone's time on what's already going to be a long video, but I was getting filled at 33, and it's like the probability that this is going to bounce is like essentially near, not 100%, but it's pretty damn close. And so a couple things I was thinking about is like, just for you all to keep in mind, there were two plays that I thought were just like, at least in probability of them closing higher, really, really good. The Nikkei, the Nikkei was definitely the scariest. The Nikkei had massive reward, but it was scary in the sense that like, I don't know, it's just massive panic, like prices kind of getting broken. Like it's not that liquid. You don't really know where that's going to settle. And I don't know the rules for Nikkei futures, so I was actually pretty scared of getting stuck in a halt as well. So all those were pretty concerning to me. But then the things that I were really confident, if you ask me my number one pick as far as probability, I'm not saying it was the best play, but as far as like where I really wanted to just kind of just go for a shit ton of buying power. Sorry, I'm just making sure I didn't miss anything. Okay, so like first of all, Bank of America down there was amazing. And now let's go a little bit into the open a bit more. So man, I'm scared how slow this computer is running. Like if this crashes, I'm so wrecked. So I bought the shit out of the NASDAQ. We had this amazing bounce. So I'm just like, oh my God, like I was so right. This is game over. Like this stuff's going to bounce super well. And I do take some off. So a lot of times I work around a core position, and especially after a big bounce like this, generally there's going to be some type of pullback. So I did take some off in here, especially when we get a sharp pop like that. And I started to rebid back into here. I was not expecting this to pull so far back. So this actually put me in a lot of trouble. Because I think, did the NKD... Yeah, so NKD started to pull back too, and this was the position I was most jacked in, just because it was the biggest, like, there was never been a move like this before, so I was most jacked in this, and this started to pull back. And so what ends up happening, oh my God, this computer's scaring me. Let me close some other programs. I'm really concerned. I don't have much else I can close. Let me close some of this. Okay. Anywho, so one other thing, because I forget, there was just so much going on. So one other thing too is Bitcoin ended up rolling over and getting nuked through 50K and immediately reclaimed. So I thought that was interesting. Most interesting for me is I had that ETH position, right? So I was really trading the the micros. And so this is like 2:30 a.m. when Bitcoin kind of melts. What's so interesting is like Ether tries to roll over and it just doesn't even come close to those lows. Like that's what a big liquidation that was. So you end up with so much cushion buying these massive liquidations. Like that kind of shows like Bitcoin sold off another 10% plus and my position didn't meaningfully go against me. Like, okay, a couple percent, but not that meaningful versus what Bitcoin was doing. So and then when Bitcoin reversed so strong, like we went from 49,000 all the way back up to 53. Then I'm like, okay, now we're talking. And so what happens is then ES rolls over. So I don't have any ES. ES is probably the only thing that I didn't trade at all. ES rolls over. And now this like IWM, the Russell Romeo Tango Yankee, nothing quite like some of the other stuff, but it also starts to melt. But really I was most in the NASDAQ and I got very lucky we didn't quite go to lows here. I was very, very concerned. I think there's a trader saying called clenching the old cheeks. The cheeks were clenched, my friends. But anywho, once this starts to kind of reclaim into the open, okay, so let's talk getting into the open. And I'm sorry this is so wordy and long, but there was just so much stuff going on, and I know some stuff is going to be relevant to some people. So let's jump to Bank of America. Bank of America, I think it was right around maybe like 8 a.m., a seller starts to come into Bank of America. So people talk about, oh, why is reading the box important? Why is reading the box important? Why is the tape, yada, yada, yada. Because I was able to see this seller showing size and he was just walking this thing down. Again, this is Bank of America. Bank of America is one of the largest, most stable businesses. And despite Buffett recently selling it probably above 40, it is a very large company. And Buffett is still a huge fan of Bank of America, right? Just because Buffett sells part of a stake doesn't mean it's like the worst piece of shit ever and should go to zero. But anywho, so it was really just one seller showing size and bringing this down. And like I've gotten into pointless internet debates with people that are like, oh my God, how do you know it's one seller? Like if you don't understand market structure and market dynamics, like, I can't really explain it to you in the scope of these videos. Like that's on you. But it's very easy to determine that like how many people out there are showing Bank of America and showing like 1,000+ share offers. Like who on earth is selling 1,000 share plus chunks of Bank of America showing size pre-market down 10% almost. Like I promise you that is not Warren Buffett. Does Warren Buffett have a lot of shares? Yes. Is Warren Buffett the type of person that sells into huge panics? Absolutely not. Anywho, so what finally ends up happening is there was like this, how big was this guy? Yeah, it was like a couple 100,000, which is just a massive massive offer to show in this thing. And so for those that recall from the prior video, Bank of America was my sleeper pick. So my bank, by now I knew that a lot of my things were going to be broken. So I didn't have any Bank of America really yet. I mean, like nothing meaningful. And so now like this is like so boring, you know? So like anything below 35, like as far as what I was most confident was going to close higher, not higher like on the day, but at least versus the pre-market price action. For whatever reason, I just felt really confident that I could park a grotesque amount of Bank of America and I would be making multiple % on it or not losing on it. With very high confidence. So, right, you know, I have a large trading account. Obviously, you get a shit ton of intraday. Oops. Oh God, not this again. You get a shit ton of intraday leverage. And so I, at this point, had freed up some buying power from somewhere. And like this to me, when that guy was coming low, like it was just like, man, I wish I had like a $1 billion account, because I would have bought all the hundreds and hundreds of thousands of those Bank of America shares. Because again, like I was just not going to lose money on that. If I was going to lose money on that, then the rest of the market would have just been so boo-fooed, right? And so then I would have just been able to sell my Bank of America at the open. You know, the stock's super liquid. And so even pre-market, I think this had an imbalance going on into the open. So like the stuff I was buying at like 34.60 or 50 or whatever the hell it was, like immediately I was selling like huge chunks. Like I think I was able to sell like 50,000 share chunks right into the open at 36. Like that is an amazing return to just scalp some of that out, right? And I'm then freeing up my buying power and giving myself some nice P&L cushion, right? If you take 150,000 of those, 200,000 of those, and you can scalp out a point $1.50, that gives you a lot of breathing room on some other shit that doesn't always go well. So Bank of America, I was super confident in. So now a couple things into the open. My general thought process was that the bottom was in, right? Again, I even tweeted that I thought the Nikkei was going to be, that implosion was going to be the bottom. So people might wonder, why do I think that? Generally, these huge implosions are just like the liquidity events that just cause, like, you need to ask yourself, why was the NASDAQ panicking down 6%? Like, that is the panic often. Why was that happening? Because of the panic in Asia. And it's the same thing where it's like, things don't always need to capitulate and implode during your market hours, right? Think about GameStop. When GameStop had that after hours ARCA seller I've spoken about on that most recent spike into like 67 or whatever, that ARCA buyer was someone just getting totally rinsed. And once that ARCA buyer was done, it was just game over. And so a lot of my thought was like, okay, the panic's already happened. It didn't happen during our market hours. That's fine. The things that concerned me, right, because I'm trying to be, pretty fair on both sides. Some of the big cons was this NVIDIA was scaring the shit out of me. Things were trying to stabilize, then NVIDIA is just really getting whacked. And I felt like this was driving the market lower. And so again, NVIDIA did have news over the weekend. So overall, NVIDIA, I wanted to be pretty careful of because of that news. Otherwise, NVIDIA has been the relatively strongest semi. And that news was the only thing that kept me from otherwise really liking this move. And so especially, I think this had a sell imbalance. I don't really recall, but then this gets knocked down. And so now there's a couple key things I'm looking at off the open. I want to pay attention to Apple. I want to pay attention, also to the VIX. So the other thing with the VIX, what am I looking for? VX, yeah, the VIX futures. Okay, that's the other thing I wanted to point out is the VIX futures had already topped and came back so far into that open. So yes, we were kind of like, I kind of felt that this whole move back would be a lower high against that implosion when everything was going nuts with the NASDAQ and everything else. So I wanted to keep an eye on the VIX. Again, watch the Stephen Place video. He speaks about this stuff far more intelligently than me. So I started to, short some of this because, VIX can really implode. And so I wanted to watch the VIX off the open. And so the VIX off the open just definitely starts to go down. And then there were a couple other setups I wanted a close eye on. So Apple formed a little resistance at 200. Here was Apple. at 200 into the open. Once Apple kind of starts trading like 201, 202, that's what I'm just thinking, oh my God, game on. Like this stuff could really rally. And like again, Apple was my second most confident pick for something that the losses would be paired. Not that it's the best trade or it's the biggest home run or anything, but just in confidence level that, oh my God, these levels are kind of silly. Like I did not think Apple was going to sustain 196. The same way I didn't think there's a meaningful chance that Bank of America sustained 34.50. And so sure enough, Apple starts to rip. And so I started to add Apple, just potentially, some against the lows. And then the other big thing was Nvidia was going down off, like the imbalance and around the open. But then this SOX L, the SOX L, I wanted to keep, we kind of had this general level at around 24. It's not the most perfect thing, but okay, we try to flush out because of the NVIDIA weakness. We start to reclaim. We're holding up way better than NVIDIA during this. Then right off the open, we break above 24. So this was game on for me. And with SOX L, these semis are so beaten down to shit. Again, what is SOX L? SOX L is just a leveraged semiconductor ETF. Man, we're opening in a 200 in SMH. That is a monster move. The index of semiconductors, which are normally boring, are opening down 20 points in one day. 20 points is normally a whole multiple weeks range. Think about how long it used to take us to cover 20 points, weeks. And then we just gap it in one day for God knows what reason. And so when that starts to go, SOX L is just more buying power effective. I was jacked to the tits in different products, so I needed to be buying power efficient, and that is important probably for especially people with a smaller account. And so, oh God, I'm getting winded. I'm buying SOX L. I'm holding on to all my NASDAQ. Let's see. The NASDAQ, right off the open, it starts to go, and overall it starts. And so when these things start to work, I'm really not selling these first little pops. I'm really thinking big picture. I'm trying to at least, I might scalp some out, but I do think oh my God, this was one hell of a move. And my thesis is things already panicked. I did end up buying some nominal amount of NVIDIA. And, this was weak, but once this turns and kind of, prior bar highs, I was buying this 93, probably 94, and probably even 95, to be honest. And so overall, I was holding some of that stuff. And I mean, as far as where I took sales, on some of these pops, I'm scalping some out, especially once we kind of find, especially once we try and find some of these ranges, I'm kind of just reducing over time. Just in general, I don't want to hold all that exposure. My most edge is catching the most confident leg. The most probable leg was these just kind of ripping off the open. Once Apple goes from 198 to 208, my edge is just so much more reduced. The expected value is just not that great anymore. But then there's stuff like the Ethereum micros. So one thing is I was kind of watching the 2400 level in ETH. Not that this was going to be clean, but once this kind of gets above, I wanted to just let it go. So a lot of this ETH, because this was just so blown out on the daily, I wasn't really quick to sell the Ethereum. This I didn't really mind holding. So I did even, so this is where you got to be careful. And I think some of my friends, we kind of fell in the trap together. This IWM. So a couple things, even on my video yesterday, I talked about how IWM is just kind of in no man's land. And that's where you can get in trouble with buying the shitty laggard, which, my friend did this and I did this too. It might have even been my idea, so we can blame me. Sorry, buddy. We bought this laggard, and so often laggards are laggards for a reason, and they kind of tend to stay shitty. But my thought was with everything ripping, I'm just going to buy the shit out of this because it's so liquid and you can just put so much capital into this. And I was just going to give it to lows. And look, it didn't do anything so miraculous. I was probably risking what? I was probably risking about 20 points. And I was taking, all throughout kind of the day, selling into some of these pops. So I think my probabilities were good. I don't think the risk reward was so amazing on this. I'm still holding some. I wanted to hold a core in everything. Um, so I've covered a lot of what I want to cover. The only thing left that I want to cover potentially is this. Oops. This VIX move into the close was pretty interesting. So the VIX can really get just absolutely implode when the contagion and the panic subsides. Like, so VIX in general, for those that don't know, like volatility generally has volatility clusters where, let me see if I can find a good example. For the most part, you have these spikes over time, but then the spikes get faded. And a lot of hedge funds just do this short vol carry trade because of just the way these roll over. It generally works until it doesn't work, which is essentially what happened recently. And so these kind of can implode and VIX just skyrockets, but then it often just fades back really, really nicely. There was a famous one and Stephen Place crushed the video on this. Like, if you can find this video that Stephen Place did in March of 2020, he really helped me crush this thing. So thank you, Stephen. You a homie. But yeah, this stuff can really implode. Like, I don't have the daily chart up, but even on the weeklies, this held miraculously well. And so I am thinking that VIX can have a really nice swing. Of course, it is a little dangerous. And so the VIX, here's what was interesting. The VIX cracked really hard most of the day. And I would say overall, the price action in the day over today was very constructive. There were no major panics. Everything was kind of just holding higher highs and higher lows. And so then what happens is the VIX kind of really, really, really starts coming back into the close. And here's what's so interesting. If I pull up the ES, right, because again, the VIX is linked to the it's vol on the S&P. What's so interesting, oh God, don't fail me, computer. So during all of this, and especially into the close, like look what the S&P is doing here. Like, essentially the S&P is barely moving anywhere, and we're just in line with kind of this prior range. The S&P is not going anywhere. And then if I look at the VIX during that time period, the VIX was absolutely exploding. And if you were looking at the box, it was just like endless mega bid where we'd kind of, crack, then it would just bid. We'd kind of crack, bid. Somebody was just doing so much volume on this. And I got the feeling that, like, it was interesting. The S&P was not going down, but this is a big move for the VIX. To go from 80 to 90 is very, very large. And so I got the feeling that, like, somebody was potentially just, being liquidated, or somebody was just buying a shit ton of protection. But the point is like, the time to buy protection is not when VIX has just totally exploded to the upside. When the market's panicking, that is precisely when you don't want to buy protection. The time to buy protection is when things are going euphoric and nobody's worried at all. When everybody's panicking, like, if everybody's yelling fire and it's stampeding, like, it's probably a little bit too late to just join the panic, right? And that's whatever was going on is doing here. And so I felt that this was really just some type of just either forced buying into the close or just some type of very stupid buying into the close. The other thing that was interesting is if you take the VIX futures, this was a massive closing print in these futures. And so I kind of suspect that it's quite possible that somebody was just getting liquidated. So because this diverged so much from the spiders, I was pretty confident this was a really, really, really good short, but it's also a very scary short because, there's rumors that Iran might hit back in the Middle East and everything. Of course, it's hard to control your risk. I don't want to stay up all night worrying about, some crazy headline or further contagion. But from a probability and expected value, I did feel like this was very good. So I did short the crap out of this. I did also kind of puss out and cover about half of it pretty quick. But I do think this could, like, in general, my base case, and again, don't quote me on this, like, I can change my views literally in 2 seconds and you will not know it. My base case is that this was the panic, right? And that was what my original tweet was. Like, oh, so that's the other thing I want to talk about. So when I used the phrase risky gamble, my trading that I was referring to, I don't believe was a risky gamble. I think it was pretty good trading overall. Not perfect. I made my mistakes. Definitely sleep hurt me. in a lot of places. You're just so foggy to connect the dots. But the risky gamble was like the same way with GameStop, that I wanted to be around when the implosion was happening, whether it was the first spike where we kind of capitulated to 80, or whether it was that that third GameStop spike where we get the after hours ARCA person just being cannon fodder. I want to use those capitulations as, like, often those are the most opportunistic. And because the huge capitulation was happening in Japan and the Nikkei, and that was what was driving markets, essentially I made the decision very early on, like, I want to trade the Nikkei more than, because keep in mind, like when I first started trading the Nikkei, the Nasdaq was only down 2.5%. So like, would I rather trade something that's making a historic, wow, look, the Nikkei is still bouncing back, incredible. So would I rather trade something that's making a historic move and down 12%, or do I want to trade the Nasdaq at minus 2.5? For me, it was like, oh my God, I want to trade this, which now, keep in mind, this has bounced over 10%. That's incredible. The Qs have not done that. So I chose to say, like, okay, I want to be where the action is at right now, not thinking the US could top that action. The US ended up having pretty good action. But what I would say is, like, a lot of this stuff was kind of pretty damn hard, unless you were kind of positioning like early and at good prices the way I was with big picture views. Like, I think this, even though it's super scary, this is actually the opportunity, especially once we settle in here. The odds of this potentially being the higher low and you can give it a looser stop is pretty good. But a lot of the trading wasn't that clean. Like, generally trading a lot of these indices can be pretty tough. So someone asked me, like, how would I rate the op overall? What would have made it better or worse? I think I might have added that part. But how would I have rated the op overall? You know, it really depends. Like, I don't think anything was like, nothing had massive asymmetry. And this is definitely home run trading. This trading entails a lot of risk. You know, like, I was down a decent shit ton of money when I took my Nikkei loss and my JPY yen loss. You know, fortunately I did way better than that. But that sucks when you take some of these losses. Like, you know, these tickers are moving around huge. Like, you can really get over your skis very easily. This is not the easy money trade stuff necessarily. This is the home run experienced trader, you know, like Super Bowl type thing. And so overall, like, there were no just like mega super clean capitulations. Like, there was some of the index stuff, but the single names less so. So I found a lot of this trading to kind of be pretty hard and pretty dangerous. Like, I was definitely taking significant risk. You know, there's times where you can trade and you can hit a home run taking almost, you know, no risk, like SMCI, zero DTEs and stuff. I was risking mucho dinero, as they would say. And it was not an easy, fun time. If I had to think, like, I think some of, like, maybe the easier setups, you know, I think Apple above 200, I think, you know, SoxL above that 24, whatever. The highest probability setup, again, I will just say, like, in my opinion, like, you know, any buying power I was putting into BAC sub 35, call it just trader intuition from trading a zillion years. I was going to make money on that. But overall, this stuff was tough. Yeah, you really needed to have the big picture view. The most important thing, like, this is where I think people most often mess up on these days, is one, they're not precise with their setup, but number two, they trade too much size and they're too in and out in stuff that isn't likely to be clean, especially these indices and these futures. Like, they tend to not be as clean as single name stocks. Oh, what do you know? Like, why am I saying, you know, indices and futures are not as clean as single name stocks? That's the whole reason why I argue single name stocks offer awesome stuff. So, you know, I don't think anything was like so amazing overall. A lot of this stuff's pretty damn choppy. So most people, what they tend to do is they tend to oversize, number one, and stop themselves out on the wicks, you know, stuff like this little wick or any of these wicks. The other thing that people do is, on a lot of this stuff, like, if there's not a good setup, you can't just be buying every breakout. Like, you can't be buying here and hitting there. You know, you can't be like, you know, chasing anything than hitting on the pullbacks. Like the last thing I want to do is chase a breakout then hit the pullback, because a lot of this stuff, it's just not crazy enough that it's going to trade clean. You know, I don't want, like, this isn't the worst buy in the world, but I don't love it enough. And I think people just take too much size and get a lot of paper cuts. So let's see. Moving forward, I think I kind of covered that. I do kind of think this stuff's just going to keep on bouncing, and this was all kind of just a nothing burger. But again, I'm entitled to change that on a dime. This is not investment advice, yada, yada, yada. And even already, like, you know, it was a good sign that, like, right after the close and after that print, the VIX started melting. I did take some YOLO shots just in, oops, what's going on? In VIX puts, being long the puts, that is, when this started spiking to 90. Don't know if those will hit. Those are the lottery tickets besides being short the equity, but I do think stuff kind of bounces. Oh, so even I forgot, like, you know, there was stuff like Micron. You know, Micron, I was long, and stuff like this, like, it's just such a big move where I just wanted some stock. And like, as far as Micron at 85, like, I'm not hitting out of that. I don't have much. What I do have, like, if this goes 10 points against me, good, bring it on. If it goes 20 points against me, good, bring it on. You know, and again, I'm sized for it to do that, where I'm just going to be able to crush it so much more. So stuff like the Micron, I'm still holding. Stuff like the ARM, this ARM actually had a pretty nice close, I'm still holding. NVIDIA closed pretty nice. So yeah, that's kind of my very long video. There was a lot to cover. I am exhausted. I probably slept like at best 2 hours once I kind of scaled down the risk. You know, I probably have a lot of new viewers on this video given how topical this thing was. So like, in general, I don't really trade super actively anymore for exactly this reason. Like, this was such a, like, my priorities are health, and happiness, and just giving back. And when you trade overnight like this with the cortisol and the adrenaline, like 12 straight hours of that with no sleep is just so ridiculously bad for you. I feel so shitty today. Then you still need to deal with just like shitty internet trolls. And it's like, yeah, it just isn't the things. Like, the money is amazing, right? Like, I did have, you know, a good day. And again, thank you to everyone for the congrats. Like, I think it's hard seeing other people do well, like, just because this is a competitive field. I think everyone has that. It's hard to, I think, be happy for people, if we're being honest, just in such a competitive field, because especially if you didn't do well, you have that drive and that fire. So thank you to everyone for being kind, grateful, hopefully learning from this. But ultimately, yeah, this was hard. And I think, like, I try to avoid some of this stuff just because, you know, this was brutal on the body. The one thing for the new people is I try to really emulate giving back. I do have a Patreon where that video, some of my videos are originally posted. All the Patreon proceeds go to charity. We built a school in Bali with some of the proceeds last year. I don't know what we're going to do this year with some of the proceeds. Then, of course, Magnum Opus is the course I'm making. You know, most of it will be free. There will be a premium version. Some of those proceeds will go to charity as well. And I think, like, the reality is like, for a couple $100, you can actually save someone's life. I do a lot of nonprofit work, and especially like malaria, whether it's for malaria pills or even just mosquito nets, you can save lives for like a couple $100. So it's pretty unfathomable. And that's really why I trade, is like, it's so crazy to me that essentially I sacrificed my life for one night. You know, I didn't particularly, like, it was fun at moments, but this is not at all what I wanted to do with my day. You know, a lot of people are like, congrats, and it's like, oh, thank you, but I'm like 0% happy. I feel like shit, and I did not enjoy this. But the way I think about it is like, the money I made doing what I did for one day of no sleep, like, yes, this probably aged me a week, but like, if that can save thousands of lives, you know, if donated and allocated properly, I think there's something beautiful to doing that, and it's a good way to give back. And when you do stuff like that, you are grateful and you appreciate what you have in your life situation. How lucky we are to be in a safe, beautiful country that I very much love, to have ideally health, decent levels of happiness, and everything else. And I think so many traders, especially on big days like this, we can get caught up in, like, we lose our sense of perspective when we trade some of this stuff. Oh my God, I only made 5K, or I only made 10K, or, someone did better than me, or I had a bad day. Like, at the end of the day, we're sitting safely, trading on a computer and just kind of playing a video game. Like, I really just view this as a video game that we can bet on. And the scale of just suffering and crappiness out there can be really massive. And sometimes we don't see that when we're behind our screens. And so I think when we give back, it's just a good little reminder that, hey, life is pretty damn good. Good people, good jobs, health, happiness. Hope you all do well. Hope you all learn something. And thank you for your time, and appreciate all the support, guys. It really meant a lot to me. And I was super tired as shit, but it was a lot of fun kind of live tweeting some of this. And yeah, thank you all so much. Appreciate it.